It's almost time to start filing your taxes, and the Tax Cuts and Jobs Act could make things a little more difficult for you. News 10's Lacey Clifton joins us now in the studio to walk us through the changes you need to know about.
At 5, we shared some major hallmarks of the act. Exemptions for dependents don't exist anymore, and there's been a change to the tax withholding table. This means you could see a lower tax refund, but you would have been getting higher paychecks and paying a lower tax rate. So what are the big talking points for small business owners?
From the moment the tax law was enacted, we have had nonstop consultations with current clients going over their situation.
The Tax Cuts and Jobs Act is shaking things up for businesses this year. Taxmasters President Thomas Jeffers says it's not all bad. One advantage is the qualified business income deduction.
It can be up to 20% of their qualified business income, which is supposed to help lower their effective rate.
The lower rate could save businesses money, but Jeffers says calculating that magic number is where the challenge comes in.
The tax softwares out there to this date are not automatically calculating that number by just plugging in income and expenses. It's going to be very difficult for small business owners who are preparing their own tax return to come up with the right number.
Jeffers says because of these changes, it might be best for you to go with a preparer. That's because they are trained to navigate all of the changes in tax code.
So it's not necessarily that people who are doing their own tax return might be getting things wrong. They just might not be getting everything that they can get. And on the flip side of that, they may be taking things that they're not supposed to, and they'll never find out until the audit letter comes.
Jeffers says people who wrote off their mileage or supplies purchased for work can't do that anymore. If you're questioning if this applies to you, Jeffers suggests you see your tax preparer.